Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, the data is in and we are fixing to go into the dark months of real estate. So today is obviously your housing market update. I'm doing it Friday morning. I'm sorry, you guys. I'm so overwhelmed with life, so I had to push it to Friday morning. But today we're gonna look at a lot of good information and a lot of good data that pertains to the housing market. Now, where we're gonna start at is last week's poll that I sent to my channel on what direction you guys think the interest rates are going. Then I'm gonna move on to the Fed economic data chart so that we see where interest rates really are. Then we're going to look at the 10-year treasury to figure out what's going to happen next week. After that, you guys, I'm going to take you to my live MLS and I'm going to show you a cluster of new building that's going on in my local market right now. Now, after that, I'm going to take you to another builder in my local market called Pulte Homes, and I'm going to show you guys massive price cuts to their inventory. And where we're going to end is I'm going to access Pulte Home Builders, and I'm going to show you guys hidden fees that I found in their promotional offers. And the reason I want to point that out, guys, is you got to be really super careful a lot of times when going to purchase a new home build, because some of those guys are worse than used car salesmen and they will take advantage of you. So that's what we're going to explore today, you guys. Now, don't forget, this is my personal YouTube channel. I'm not a financial advisor, even though my bio is as a realtor, loan officer, and instructor in real estate in Texas. So you guys do me a favor for my effort, for my video a day, sometimes 2 videos a day, like this video, comment if you can, subscribe if you haven't already, but let's get started right now. All right, so first things first, you guys, here's the poll that I did last week. And do me a favor, guys, when you see me put up this week's poll, vote on it. Let me know what you think is going to happen with interest rates. But here's last week's. Obviously, I kind of posted this late. This is only about 2 days old. There was 3.8 thousand votes. And here's the question. It's basically interest rates going to be higher this Thursday versus 5.89 or lower. My guess was a bump up to 6.10. 96% of voters on this poll also agreed that mortgage rates were going to go up this Thursday once the Fed economic data chart updated. So let's see where we're at on that report right now. Now, as you guys can see, once again, this is Fed economic data, 30-year fixed rate mortgage. Now, it did go up. So the interest rates did go up, you guys. I was right. I've been right every single time except once on the trajectory of the interest rates. So the new average interest rate is 6.02. So like I said last week, I didn't know if they would get to 6.1. I guessed 6.1 because I have to guess something, but I did figure that we would hit 6% on average this week. Now, remember, guys, here's what's important about that 6.02. Okay. Remember, your interest rate is probably going to be a 0.5 point to 3/4 of a point higher than what's being reported on Fed economic data, which means we are already close to hitting 7%. And I believe that this month in September that we will have plenty of people that are not as well qualified, right? That don't have 20% down, maybe a 620 FICO score doing conventional loan. They're going to get 7% this month. Mark my words, in September. And you guys, that was really hard for me to see at the beginning of the year, but now it's really easy to see that. And it's possible that we hit 8% by year end, right? I'm not saying everyone, I'm saying like the worst qualified people, 8% possibly this year. Now let's look at the 10-year treasury to try to get an indication of what direction the mortgage rates are going to head next week. Take a look at the 10-year right now. Okay, so the first thing I want to point out here, guys, is look at the inversion. Okay, so here's what we're measuring right here. Here's the 10-year. Here's what has a huge correlation with the mortgage rates. So obviously this is higher than it was last week. So I'm going to say that rates are going to be higher. But first, I just really want to point out that all the other rates, the 5-year, 3-year, 2-year, 1-year, 9-month, 6-month, and even the 3-month is now higher than the 10-year. So all of this is inverted. You guys, this is clearly signs of a recession. I'm really disappointed with the administration not talking more into the recession because, again, it's my opinion that people should, once they receive information that they don't like this, people should be able to prepare for it. And if you prepare for it, you're going to get through it better. But it's all this whiplashing and rug pulling that's really messing us up. But anyways, guys, here's what I'm thinking. I'm thinking a modest or very slight increase up next week as far as interest rates. So what I'm going to guess is an 8 basis point or a small increase upward to 6.1%. But I also want to say that really depends on if the Federal Reserve actually starts selling mortgage-backed securities, because we know that this month they were supposed to start selling $35 billion worth of mortgage-backed securities. And the thing is, guys, the last 3 months, they were supposed to have been selling $17 billion worth of mortgage-backed securities. And the problem is, I don't think they've started selling mortgage-backed securities at all. Take a look at this. And this is why I'm only saying a modest interest rate increase. If I thought that the Federal Reserve was for sure going to sell mortgage-backed securities, I would say 6.25 or something even higher. But this is the holdings for mortgage-backed securities. And as you can see, as of September 7th, they really haven't started selling mortgage-backed securities. This is insane. This is a 1-year view. Here's the 5-year view. I mean, after lockdown, it's just buy. This is insane, you guys. And take a look at this. Here's what they're supposed to be doing. This is from the Board of Governors of the Federal Reserve System. Now, they're supposed to increase the mortgage-backed security sales this month to $35 billion per month. Here's the thing, you guys. I don't think they're going to do it. I don't think our economy can even handle it. But if they do it, I definitely think the rates will be higher than 6.1 next week. But I'm banking on the fact that they're probably not going to sell $35 billion of mortgage-backed securities because our economy probably can't handle it. So 6.10, modest increased upward. But what I want to do right now is I'm going to pull up a bullet point from Black Knight, because I want you guys to see how the interest rates are really destroying and affecting both value and prices. Take a look at this article right now. And you guys, really, I just want to read the first 3 bullet points. This is from Black Knight. Black Knight's a really big data provider. They lag bad though. So I expected them and Realtor.com to declare this month that prices were actually going down. Obviously, Redfin has been well ahead of the curve on that. But here's what these 3 bullet points say. Annual home growth has shifted from deceleration to decline in July as the median home price fell 0.77% from June. That's the largest single month decline since January 2011. More than 85% of the 50 largest U.S. markets are at least marginally off their peaks through July, when home prices were down by greater than 1% in a third, and more than 10 seeing prices fall by more than 4% or more. So this is saying, guys, that almost every large metro area in the US has passed their peak. Most metro areas peaked in June. Some didn't, but most did. So those are the 2 bullet points, guys. I know I said 3 bullet points, but I don't want to read the 3. It's not really pertaining to this video, so I'm going to stick with 2. But let's move on to the next thing right now, which is accessing my local live MLS. And I show you guys this because this is not lagging data. This is live. And what I want to point out here, and I've been telling you guys this, we need to watch new home builders because they are in super bad shape. So even though they should sell the inventory they have no choice but to put more inventory on the market and finish the building. And obviously, you guys, here's Kingwood. Okay. So here's a huge pocket of new builds right here. Here's a huge pocket right here. And I'm watching these. You guys may remember me saying that I've been watching these for price cuts. This builder has not started price cutting, but they have a lot of inventory here and a lot of inventory here. But look at this, just right up the way, less than a mile. And I showed you guys this last week. Look at this last week, this all came on the market, all this cluster. But what came on the market this week is an additional cluster. Look at this. This is an additional cluster of new home builds right here. Now they're still overpriced, but the thing is, you guys, they can't stop. They can't stop building. They're completing their projects. All of these houses right here, fire sale, especially going into the dark months, especially this year, you guys. But I am seeing huge influxes of inventory all over the place in my local housing market. And you guys will probably start seeing the same thing yourself. Now, what I want to do is basically point out to you guys, if you're watching your local housing market like I am, and you notice that there's new home builders, what I want you to do is go directly to that new home builder's website to see if you can really find the price cuts that they're doing. So what I've decided to do is I'm going to access a home builder called Perry Homes. Perry Homes is pretty big in Texas, not necessarily around the nation, but I was able to find Perry Homes from doing my research in my local housing market. So when I went onto their website, take a look at what I found. All right, guys, so this is Perry Homes right here, and I've selected basically Houston. Okay, so this is Houston, and what I want to do is essentially show you some of the price cuts. Okay, so here's the first price cut. Again, this is Perry. This is in New Caney. This is by Travola. Obviously, I've covered this area, but look at this, guys. So this is more than Lennar now. This has actually moved over to Perry Homes, and it's going to start spreading to multiple builders. But look at this. This is $100,000 price cut. Originally, this house right here was listed for $619,900. It's now listed for $519,900. That's $100,000 off, or even more important, 19.2% price deduction on a new home. Do you guys understand why I'm saying new homes biggest at risk? Keep your eyes on new homes. $100,000 off or 19% decrease. You guys, it's a buyer's market right now for new homes. I'm just saying in most metro areas, not all, most metro areas. Look at the second house right here. The second house was originally listed for $506,900. It was reduced to $439,900 right here. You guys, that represents $67,000 off, or 15.2%. So you bought these houses 1 month ago, you overpaid 15% here, 19% here. Do you guys see? The longer you wait right now, the better the deal. Let's look at the third house. Here's a third house right here. This was originally listed for $512,900. It was reduced to $449,900, which is a difference of $63,000 or 14% off. And what I want you guys to do right now, I want you to access the data in your local housing market. I want you to start writing down who the new builders are in your area. And I want you to start going to those new builders' websites to see if you can see fire sales starting to come, because I want you guys to be ahead of the curve on this one. And you have to understand what a good deal is versus what a great deal is. And you shouldn't be buying houses right now unless you find a great deal, because that is the direction we're headed. But I want to show you this. The number three home builder in the nation, I think it's called Pulte Homes, has hidden fees. I want to show you what I found when I accessed the number 3 home builder in our nation and the special offer that they're giving to potential homeowners. Take a look at this. So when I first went to Pulte, I was like, oh my gosh, look at this 2.99 interest rates, right? Look at how they're selling you 2.99, 3.99, 4.99. Okay, this looks great. First of all, as a loan officer, I already can tell, look at, okay, this is fixed for 1 year and then it adjusts, fixed for 1 year, then it adjusts, fixed for 1 year, and then it adjusts. Okay, so this is not even a good adjustable rate mortgage, but it is what it is. So let me show you what happened when I hit offer details. And you guys, this is why you need representation when you go to new home builders. New home builders, not all, some, worse than car salesmen. If you don't have a rep or a realtor or someone super smart, you're going to get taken advantage of from these new home builders. I can almost guarantee it. I've seen it happen all the time. Let's see what I found when I hit offer details. All right, so here's the fine print, guys. So when I started reading the fine print, I automatically found immediately, so that amazing offer that they're putting on the front of the page requires a buy down fee of $8,376. This is a hidden fee of $8,376 to get that special offer they were advertising. But not only that, you guys, this is also for 20% down. If you see, this is a loan amount of $400. Okay, sales price of $500. That means you have to have a 20% down payment. So you have to have a 20% down payment, but also you have to have excellent credit. So in other words, in order to get this right here, you have to pay for it. You guys, you have to pay for that. You have to pay for the adjustable rate mortgage. But look at the advertisement. How beautiful does that look? What do your eyes go to? 2.99? Y'all want to buy this house at 2.99 fixed rate? Y'all want that? You can't have it because it's not real. Plus, that's as of the end of August. Guess what's happened since then? Interest rates went up twice since then. So they can't even offer that no more. What they should be doing is removing that from their website. But you guys see the visualization here. You guys see how they market to you. You see how they're hitting your brain. 2.99%. even though it's only fixed for 1 year, and even though you have to buy it down for $8,400, put a down payment of 20%, and have exceptional credit. Do y'all see the problem here? And you guys, that's really, really important for you to understand that these types of things happen all the time. And the real issue here with the new home builders is they're not regulated the same way as realtors and loan officers. New home builders are essentially regulated like they're normal sellers because they build the house. So they have different regulation. As a result of the different regulation, their purchase contracts are generally 4 to 5 times thicker in paperwork than a normal residential purchase contract. And what I have noticed is if you can read the 150 pages, is typically new home builders have contracts that are designed specifically to protect them and not you. So I warn you, even though we're going to get great deals from new home builders, don't go in blind. Even if you know what a great deal is, even if you're doing all the work that I'm saying, do not go in blind, because they're very, very clever on the back end with escrow fees, purchase prices, amenities, all kinds of stuff that they can do. So you're going to need what I'm saying specifically. If you're going to buy a new home builder, and if you're not a realtor already, you better bring in an exceptional realtor to negotiate on your behalf, because if you don't, I've seen these new home builders swallow up alive home buyers, especially if they go into a new build without their realtor. They will take advantage of you. So again, be careful for that. Now, other than that, you guys, I really appreciate you watching this video. I hope you got some value from it. And if you're out there investing in real estate, I do wish you luck, and I hope you win.